Assalamualaikum warahmatullahi wabarakatuh. My name is Fatin Nur Azmina binti Abdul Aziz, and today I will present the impact of 1999 ASEAN financial crisis in Malaysia. The ASEAN financial crisis was happened in July 1997. The Thai baht financial was collapsed due to a scarcity of foreign cash. The Thai government was obligated to float the baht. Thailand became bankrupt as a result of the collapse of the Thai currency and the large foreign debt acquired by the Thai government. This resulted in a depreciation of a real estate and stock markets, causing many businesses to fail. The ASEAN financial crisis that affected of East Asia and Southeast Asia. The most countries that affected by crisis is Thailand, Indonesia, and South Korea. Another country that affected by the collapse include Hong Kong, Laos, Malaysia, and Philippines. However, Brunei, mainland China, Singapore, Taiwan, and Vietnam were less affected. On that crisis, Dr. Mahathir was the Prime Minister of Malaysia. The decline is being caused by the ringgit exchange rate. Between March and July 1997, the ringgit US dollar exchange rate fell from 2 ringgit 48 cent to 2 ringgit 57 cent per US dollar. By the end of 1997, the currency rate had fallen to 3 ringgit per US dollar. For first impact, we look at economies of scale. As a company's manufacturing becomes more efficient, it benefits from economies of scale. Economies of scale may be gained by increasing output while reducing the cost. This happens because expenditures are spread out among a bigger number of goods. It is reasonable to have both fixed and variable costs. The size of the firm matters when it comes to economies of scale. The cost of reduction increase as the organization grows in size. All nations are experiencing a downturn or fall in their economies as a result of the ASEAN financial crisis. Early on in the crisis, a drop in export demand across the region slowed trade. In US dollar terms, however, export growth has recently shown the sign of revival and has even turned positive since the fourth quarter of 1998. The ringgit's depreciation has assisted the increase in international demand. This is acceptable in the short term, but it would be interesting to see if this strategy can be sustained in the long run, especially if the currency lock is withdrawn or the current 3 ringgit 80 cent exchange rate with the US dollar is adjusted. The devaluation of the currency will typically assist to enhance the current account balance. Exports expand faster than import as the ringgit falls in value, reducing the current account deficit. For importers, an RM4 ringgit to US dollar exchange rate implies they will have to pay around 37.5% more than they did before July 1997 when the exchange rate was 2 ringgit 50 cent. The weakening of the ringgit has boosted exports of Malaysian goods. According to exporters, in ringgit terms, export value increased by 12.4% in 1997 compared to the previous year, but just 0.5% in US dollar terms. In ringgit terms, export growth in April 1998 was 44.5%, higher than the same in time in 1997. Imports increased by 12% in ringgit terms and 0.2% in US dollar terms in 1997. Next impact is technological gap. This appears to be considerable turnaround in domestic demand and company confidence. Based on that figure, we can see that the first quarter 1999 results of the Business Conditions Index, which report a 3.5 points improvement to reach 48.5 points. The preliminary findings of the BCI surveys second quarter reveal a fairly significant upward trend that indicate an uptick in economic activity. The manufacturing sector has performed particularly well, with greater sales reported as a result of stronger domestic demand. Furthermore, the index of industrial production has recently shown some signs of improvement. The IIP has been on the decrease since February 1998, with industrial output falling by negative 3.4% and manufacturing output falling by negative 4.3% in the first quarter of 1999. Given the clear evidence of rising demand, the declining IIP implied that manufacturers were instead choosing to reduce their stocks rather than produce more. Industrial production, on the other hand, increased by 2.6% year-over-year in April 1999. while manufacturing output increased by 4.5% over the previous year. In the second and future quarters, the industrial production in general and manufacturing in particular will almost certainly expand significantly. Economic integration is one of the impact of ASEAN financial crisis. In September 1999, the statutory reserve ratio SRR requirement was decreased to 4% due to the ASEAN financial crisis and the introduction of a looser monetary policy. Interest rates have also dropped dramatically, with interbank rates decreasing from over 11% in September 1998 to 6.4% in February 1999. Commercial bank-based lending rate fell from 11.96% in March 1998 to 8.05% in March 1999. Bank Negara established an 8% growth objective for loans by the end of 1999 in order to stimulate the economy and attain a growth rate of at least 1%. Unfortunately, the goal was not met and the total loan growth continues to be slow. To some extent, this is attributes to banks' excessively cautious approach and weak loan demand. While increased loan growth is necessary to promote the economy, banks' pressure to meet a target may accidentally result in loans being issued to corporations with bad credit or for unsuitable projects. In the long term, this may have negative consequences for bank asset quality. Next, we look in investment aspect. While the currency and money controls have temporarily restored internal stability and trust, their medium and and long-term consequences are likely to be negative. Despite the fact that the restrictions were not expressly targeted against FDI, which is foreign direct investment, it is obvious that foreign investors are concerned about Malaysia's capital controls, largely because they appear to impair policy consistency and predictability, at least in international investors' view. The rejection of Malaysian stocks from the Morgan Stanley Capital International (MSCI) and International Finance Corporation (IFC) index, as well as the downgrading of Malaysia's sovereign ratings, expected to deal another blow to international investors' confidence and recognition of Malaysia as a good investment destination. The IFC recent decision to restore Malaysia is encouraging since it might indicate a similar trend in the international financial community. In 1998, the value of foreign direct investment permit grew by 40% over the previous year. The total amount of foreign direct investment approvals in the first quarter of 1999 was RM 1.3 billion, which was still much less than the average quarterly amount in 1998. Foreign direct investment approvals, on the other hand, may not always reflect the current reality because not all approvals are followed through. Furthermore, the current year's net FDI inflow might include the execution of previous year's approvals while leaving out a portion of this year's approval. As a result, year-over-year increase in approval do not have to correlate to year-over-year improvement in net inflows. The new FBI application in the manufacturing sector totaled 12.7 billion for the full year of 1998, which is a stronger signal in this respect. While the reduction might be linked to international investors' growing wariness with the region's economies, it could also be related to a drop in investors' confidence in the Malaysian economy, which may be changing for the better. The last impact of ASEAN financial crisis is foreign exchange market. The ringgit, the KLCI dropped from 1,216 points in late January 1997 to 594 points in December of that year. The market capitalization fell from 8 to 6 billion in January 1997 to 200 billion in August 1998. The markets was alarmed by the drop in the exchange rate and the drop in the KLCI. This results in a stock sell-off and a rush to sell the ringgit. The main solution of this problem is we need to cut the tax. A tax is a mandatory contribution to state revenue received by the government on employees' earnings and corporate profits or added to the cost of certain goods, services and transactions. We know that higher tax will decrease the consumer. When the tax will cut, it will leave more disposable income at the hand of people. So the spending and aggregate demand will increase after the tax cut. Next is lowering interest rate. By lowering interest rate, it will increase the investment. Increasing government spending will increase aggregate demand. And these steps will help the economy bounce back by increasing aggregate demand and investment. After that, another solution also can be used to solve the ASEAN financial crisis problem is the government can reduce the cash reserve ratio, CRR. Cash reserve ratio is the amount of cash commercial banks that need to keep a reserve with the central bank. By reducing CRR, increases the amount of cash with the commercial banks which can be provided to the people in the form of loans. Other than that, the government also can reduce the repo rate. Repo rate is the interest rate at which central bank give loans to the commercial bank. Reduction in repo rate makes the loan available at a low rate of interest, and thus more funds is available to the public in the form of easy loans by increasing the cash floating in the market to the common public in the form of loans. The standard of living of the people is improved. New entrepreneurial ventures come up, leading to better job opportunities, better standard of living, and thus higher level of demand. Thus, the overall GDP rise as more production and supply is required to meet the increasing demand of the people. The best thing that I like in international economic classes were that I explained a lot of the concepts that I was unsure about very concisely and very accurately. In a way no one else ever did before. At first, I thought for this subject it was difficult as my economic foundation was very low and I was not interested in learning about the facts. However, in the end of these classes, I was interested in studying economics. Before this, I only heard from friends when they are discussing the economics, and I did not understand about economics as all. After learning it, it was very interesting subject because we can apply it in our life. For example, when we learn about the foreign exchange market, or also known as forex, we can make money from that. Before this, I don't understand what my friend was talk about and why they joined the class and learn about the forex. After that, I know that my friend was make an extra money from forex, and it was an interesting, and I get a lot of knowledge from learning economics. That's all from me. Thank you.